Hi, my name is Esa Koponen. I work as Investment Director at Tesi. And we've just published a new study focusing on the urban tech and built environment decarbonization opportunities in the Finnish VC and growth company ecosystem. Built environment and buildings generate over 40% of global greenhouse gas emissions. As investors are increasingly screening investment opportunities in climate tech, urban technologies that accelerate decarbonization in the built environment are becoming more relevant than ever. This provides opportunities for investors, startups, and society to find sustainable growth that mitigates and adapts to climate change. We have identified 260 startups and growth companies that meet our decarbonization criteria. We have split the data sample into 4 key verticals: experience, operate, build, and enable. By experience segment, we mean companies that are active in the future of work, air quality, air pollution, or safe and healthy building space. By operate, we mean companies that are active in urban mobility and logistics, building automation, heating, cooling, facility management, and track the sustainability in the built environment space. By build segment, we mean companies that are active in new ways of construction, modular construction, construction tech, or new innovative building materials. And by enable segment, we mean companies that are active in the construction circularity, smart infrastructure, or renewable local clean energy. In our funding data, we have included only primary equity rounds from VC funds and growth funds and the IPO market, as this data is widely available in the market, but we have excluded all M&A and buyout transaction data, as this is not credibly available from the public sources. Funding data looks promising. There's been over 800 million of equity raised to urban tech startups and growth companies since 2015. The funding has five-folded since 2019 and continues to grow still at 2023 despite the overall market turmoil, mainly driven by a few larger funding rounds. The median urban tech funding round has grown from 1 million to 3 million over our data period. And the market share of the urban tech from the overall Finnish ecosystem has averaged roughly 8%. When we look at the investor data, there's increasing amount of investors investing in the urban tech landscape, with private funds covering close to 60% of the market. There's also new investors emerging into the space, especially from the corporate venturing side. Foreign investors have covered roughly 40% of the Finnish deals, with 20% of the foreign investors having more than one investment to the Finnish ecosystem. Based on our data, we find that there's clear segregation of growth between winners and losers in the segment. The most successful companies so far can be found from the EV value chain, renewable energy, smart infrastructure, and the building IoT. 2024 outlook. We expect the overall funding amounts to decrease compared to 23, as 23 numbers were driven by a few larger funding rounds. But I think we still expect more larger A rounds coming into 24, as there has been a high amount of seed activity between 21 and 22 in the Finnish market. As the interest rate environment stabilizes, we expect gradual recovery of the underlying construction and property market that should support the urban tech and built environment companies. But I think part of the prop tech market, especially the companies operating the cyclical or non-critical segments of the prop tech, are likely to lose 1 or 2 years of growth, leading to potential funding difficulties in the follow-up rounds. Going into 2024, VCs and growth funds are in a good position to capture new deals, as we think that the valuations are more attractive and the IPO market for the scale-ups is unlikely to be back before the end of 2024. So these were the highlights of our urban tech study. You can find the full report from our webpage, tesi.fi. If you got any questions, comments, want to discuss the market or potential deal opportunities, please get in touch.